Is there opportunity in this down market? Hi, everyone. Welcome to the Real Vision Daily Briefing. Here with us today is Tony Greer, editor of the Morning Navigator newsletter. Hi, Tony.
Maggie, how are you today?
I'm okay. How you doing?
Fabulous. Thank you. What's cooking?
So you're probably one of the few people saying that, Tony, because it's been sort of a tough, beginning of the week, end of last week, and we saw today stocks, bonds, oil, gold, all moving lower. What do you make of this market action?
Man, it's a tug of war, isn't it? Right? I kind of see a tug of war every day between the recessionists and the inflationists, as we call them.
Mm.
Obviously, we had a massive headline last Thursday with Jerome Powell at Jackson Hole, where, he basically pledged to fight inflation, that they see being around for an extended period of time. I forgot the exact words he used, but obviously that freaked out the market. The S&P took a big spill. We got saved by the bell on Friday, treaded water yesterday, and then the S&P broke its last line of technical support today when it fell below the 50-day moving average. Now we're seeing some follow through. But what we have been seeing is, the S&P kind of treading water and retracing. We saw a big catch-up move in natural resources towards the end of the month of August, as interest rates rose with that Powell comment. And it just looks like stocks are taking it on the chin because they're not going to be, they're not going to be well suited going into this sort of economic slowdown with the Fed fighting inflation, moving rates higher. So, it's going to be a tough slog for the S&P for sure if higher rates are on the agenda. So I think that's what we're seeing pan out in the markets this week.
Yeah, and you had some of the, I think what worried people as well is you had some of the Fed official, I think it was Kashkari yesterday saying, yeah, we saw the market reaction. We were pretty happy with it. I mean, they're sort of telling you that risk assets and stocks are a casualty they're willing to tolerate in order to kind of burnish their, inflation fighting credentials. We are in this last week of August. I don't know what you've seen in terms of volumes, but the sell-off has been pretty orderly so far. Is there a risk that when we get people coming back and plugging back in September that, we have a sort of uglier push to the downside and break through those lows we saw?
Yeah, absolutely. That's a risk, especially now that the next line of support in the S&P is probably that double bottom down at 3750 that we vaulted off of in June. So with that being the low hanging fruit, that's probably what, another 4 or 5% lower from here. And then we'll see type of thing. But I don't want to start calling too many moves in a row. I don't like to do that. I like to focus on the one that's happening right now. Right now, the S&P is breaking down below the 50-day. It's being led by oil. All of the natural resources trade, oil services, metals and mining on the downside. Technology is also getting beaten up today, just not as bad. You've got builders and retail. It's all in the red. So you've got the interest rate sensitive stocks falling, and you've got natural resources stocks all pulling back from a dramatic high that they just made there was the natural resources stocks, Maggie, if you recall, over the last several weeks that were holding the S&P together, while technology was sort of failing those retracement levels and coming apart. So right now they've got every sector on the run, and we happen to be, kind of back to backing this first bout with natural resources selling with, this 5% sell off in crude oil from 98 to $92. Doesn't seem like it's got a lot of oomph behind it in terms of, fundamental or headline firepower. It seems to be going on, the fumes of this Iraq headline. There's going to be less trouble in Iraq and more of its oil is going to be available. And so maybe that's what took the last couple percent out of the price. But it seems to me like the moves that are going to be persistent, that have been consistent with higher dollar and higher rates, are going to be higher commodities and probably lower equities led by tech stocks. And that's kind of what we're seeing pan out.
Yeah. And, Tony, I that's why we were kind of thinking about where are the opportunities, or are there opportunities in this market? And we'll get to the timing of all of this because I think that's, it's tricky. And as you say, we're in this really volatile period. But Warren Pies tweeted out something about that sort of supply and demand push and pull that we're seeing play out in the oil markets. And we thought this was really interesting. He said oil bears are arguing that Saudi statement last week and the flaring political risks in Iraq and Iran have saved the bulls. Remember, bullish things happen when spare capacity is thin. The idea that you can just chalk up a couple of sort of not temporary, but geopolitical headlines to the fact that we saw that move up that you were talking about in oil. Talk to me a little bit about what you think this range for oil looks like when you've got that underlying issue of very little capacity out there.
Yeah, I've been telling my clients, Maggie, that one of two stories that I would not take my eye off, as it relates to the energy market is one of which is Prince Abdulaziz's comments. I think they were at the very beginning of this week or late last week, where he said that, he noticed that the paper markets were clearly separated from the physical markets right now, which were extremely tight. He senses some sort of, not sure what words he uses, but manipulation, certainly of some sort, is what he seemed to lend himself to. And right from there, the oil markets took off. So it sounds like, he may have fired a warning shot to whoever he decided might be, selling paper oil futures just for the effect. Who is a candidate to do that? Certainly the administration is, with election pending in November, midterms pending in November, and the gas price finally falling from $5 to $4. So he senses a little bit of chicanery. I think it's important to keep an eye on that. I think it's important to keep an eye on this week things like, spreads have really bounced off of the lows that we saw last week when the calendar got deflated with oil on its lows. We're seeing it come barking back this week with the oil rally, to the extent that front month WTI spread, OCT at one point yesterday tripled from 30, well, not in one day, but from its lows of around 30 cents, traded well above 90 cents in all of 3 or 4 sessions. So that speaks to the fact that the market remains tight, and the fact that the calendar still is likely to widen out. And I think that likely the price is going to stay somewhere around here. The market seems to be magnetized towards like 92 middle, if you will, trading 88, 88, 96 kind of a range, if we can call it that for now. But it feels like it's just battling up against its moving averages and trying to take off again, if you ask me. So,
Yeah.
One of the big tells, I think, Maggie, also in August, was the fact that, energy and natural resources stocks before today, and there still should be positive, we're up in a month that the S&P got crushed, tech stocks got crushed, and the commodities complex held in tight. So I think that that's the underlying theme, and I'm very curious to see how that translates into tomorrow's month-end closes, which are going to be really, really important.
Yeah, I just want to circle back, and let's talk about that in a minute. I just want to circle back because I think it's so important that you brought that up. We did see that comment. It was funny because it was in the midst of all the Fed headlines coming out and stuff. So I'm not sure everybody paid as much attention to it as they should have. But really interesting to hear you put some color around that. The idea, and again, it's speculation, but clearly the idea that there are some people that might be playing in the market. There was a U.S. consumer confidence number out today. It advanced to its highest level since May, and we all looked at that and thought, that's interesting when everyone's really worried about recession. Why is that? Because Americans are growing more optimistic about the economy amid falling gas prices. That gas price is so critical to consumer expectations. So you can see the kind of connection back through the thread you're talking about. So that really great to highlight that.
That's unfortunate to hear, because I don't think that gas prices are going to fall very much further. So, consumer confidence may be a sail up here, in the 103 area or something like that. But, we continue to see tight markets. We continue to see diesel prices, upward pressure and tightness in diesel prices. We've got the main event, as I've been calling it, panning out across the pond, with European electricity prices gone wild.
Wow.
Driven by their natural gas prices gone wild, driven by their energy policy gone wild. So we're going to see, what breaks here, likely in the coming months. The story is that they have got enough storage, or at least they're at 80 or 85% capacity and have enough storage for this winter. I still believe that they're beholden to all kinds of upside risk, including Putin risk, Mother Nature risk, and just general things going wrong risk. So, we'll see how that pans out and what the energy does and what the energy market does to follow. But so far, we've got a pretty good cap in natural gas at $10, and it hasn't been able to break through there. So my sense is if it doesn't get scooting through there quickly on some kind of a headline, that the next big move in natural gas might be down from here, but we'll see.
Tony, so for oil, like if we've got that capacity issue, that is basically not no investment, that kind of structural problem with very spare capacity and really no margin for error. Do are you do you buy oil or you long oil, or no you can't because of the threat of depression. Gosh, I hope it's not that recession keeping a lid on oil. Is it just keep the range in, and then you can't be super bullish on oil because of that, the potential of a looming recession and the Fed?
Yeah, you have to understand that as an oil bull, which is the camp that I'm in and have been in for 2 years plus now, um, it's going to be a battle through several things on the upside. Your risk is obviously a much slower economy. Your risk is any pivot in policy, out of the administration, which doesn't seem likely, but it's certainly a risk that's a non-zero probability. And things like that. So, with your eye, sort of on those risks, but then seeing how the administration tends to double down and the establishment in Europe tends to double down on the things that they've been pushing, despite the damage that they're causing, that's where you start to see, you start to make connections to what happened during lockdown. During lockdown, we saw all the restaurants closing, et cetera, because they have no cash flow.
Mm.
Now, during all of these restrictive energy policies, excuse me, the restrictive energy policies causing electricity prices to go berserk. Now you're seeing the small mom and pop shops forcing to close. You're seeing stories on Twitter about the bakery whose electricity bill went from $12,000 to $60,000 over the course of a month, and something that, is literally a we have to shut down type of scenario. So, you wonder what's going to break here, but we're certainly getting closer to where the rubber meets the road in terms of something has to give in terms of the ESG and the sort of Davos crowd energy policy that's being pushed really hard. At least
Yeah.
it's met with some resistance finally. So we'll see what happens.
Yeah, absolutely. Andreas Steno Larson sat down with Mark Nelson to discuss. I mean, the electricity, the charts of the electricity prices in Europe are really hard to wrap your head around when you see them. I think somebody was saying it looks like the craziest risk asset you've ever seen. If it's, and I had a friend we had a friend visiting from Germany, and we were talking to them about their real concern about what's coming this winter and people just struggling to pay those electric bills. So Andreas sat down with Mark Nelson to talk about all that, and what the continent is going to have to face. And they talked about, the changing sentiment around nuclear. Very interesting. Let's have a listen to a clip from that.
Part of the pain of this energy crisis is going to get people to figure out which of their fears and which of their concerns don't matter for feeding yourself and heating your family and having warm showers and things like that, and which of your concerns are relevant. And that will be in the favor of nuclear, obviously. That's all why we're seeing the polls move in that direction, from Germany to Britain to Japan. The polls are moving in the correct direction. Then you need a program. What's a program? Well, in the UAE, again, they spent a few years getting set up to do a good bidding process. They did a bidding process, chose a winner, and soon that winner started digging and building. The official start was about, I think, 2012. And then they had their first reactor come online, I believe it was 2019. So what is that? Oh, sorry, I guess it was 2020 for the official start. So 2020, you get a unit come on. Nice. 2021, you get another. 2022, we're going to get another. 2023, we're going to get another. So was it 8 years to build? And we think of 4 reactors, was that 8 years? So what, like maybe 32 years? No, it was 8 years for 1, 9 years for 2, 10 years for 3, and 11 years for 4. And at that point, it's a quarter of their energy supply, of their electricity supply, rather. That's a program. Just shows you nuclear maybe is just, if people can come along and just wreck it, maybe that's not great. But the other energy sources are not doing so hot. I think that's the big thing here.
And that entire interview is available on our website. Really fascinating discussion. And Tony, this is, I mean, the stakes could not be higher for Europe right now.
Yeah, they couldn't be higher. The uranium trade is an interesting one. I enjoyed that clip, Maggie. I think that it's fun to watch the ESG fade trade. Uranium tends to come to life when you see, in German electricity prices go to $1,000 per, €1,000 per million BTU over there. We saw Cameco report a really strong quarter at the beginning of the month that kind of got the sector rolling, and now we're breaking through moving average resistance in the URA ETF, and it looks like it wants to take off again. So as a fossil fuel bull, I've got to understand that there's another, at least another sheriff in town out there. It seems like it would take a literal, it seems like it would take the lobby group the size of the U.S. pharmaceutical lobby to get, people to become acceptant toward nuclear power again, even though that we've proven out how much safer it's become over the years, and how reliable it is, et cetera, et cetera. So, that's the kind of ace in the hole that the European leaders can finally play. When the rubber really hits the road, and more shops start closing and more people get unemployed, and there's a bigger energy price crisis, and that may be a little bit of the downside risk to the fossil fuel trade, and that might be a little bit of a give and take that we're starting to see in the markets now, where when fossil fuels take a dip, nuclear comes to life. So if that dynamic starts, it'll be interesting to watch.
That's a really interesting way to think about it, Tony, because I don't think we've kind of really all gotten our minds around that, because it has been kind of a nascent market that was, a lot of people talking about it in the way you are from a fundamental point of view, from a trading point of view. By the way, Raul Duke on YouTube saying, what is the UK going to do this winter with energy bills up 80%? People are going to freeze and go hungry. That's why we said the stakes could not be higher. there is real concern about the fallout. It's not just the UK, it's across the continent, at least, especially Northern Europe. But Tony, so for all that bullish sentiment, I'm just kind of curious, because I know you watch these things from a trader perspective too. We've had a big move. It's been a quick one. You said URA. I think we looked up 10% in the last 5 days. Cameco, which that ticker is CCJ, up 19% in 5 days. Nuclear is a long story. It takes a long time for these plans to get built, for the transition to happen, for the investment. It's CapEx heavy. Would you be worried about a move that quickly? We always go back to the conversation that Jared Dillian had on Twitter about too many a-holes being in the space. What do we need to understand about looking at that, especially if some people are not familiar with the sort of, nuances of uranium?
Well, I'm first of all, I have to put forth my usual disclaimer, is that uranium is not and has never been my trade. I sort of just try to keep up with it from a macro perspective as it relates to the trades that I'm in. I am bullish the sector for the long term. I do own some uranium risk in longer term trading accounts. I have no short term uranium risk on. So my contribution at least could be, the stuff is uranium, it's nuclear. It is very headline driven. It is very volatile. As you said, it's a very long time to play out. So it seems like whenever bulls get the upper hand, bears have got plenty of time to wear them back down again and wear the prices back down. But if the price of uranium remains bid, which should be helped by the Sprott Physical Uranium Trust, taking a lot of physical uranium off the market, that's what the market needs for uranium to go bid, so that it's worth it for more producers incentive-wise to pull it out of the ground. And then at that point, maybe you get a much healthier and transparent uranium market that lends itself towards transition toward nuclear, right? Because it doesn't seem like we're going to get the power from wind and solar. It doesn't seem like we're going to be allowed to use the unbelievably efficient power of fossil fuels, because we need to have high ESG scores until everybody starts rebelling against what's going on. And we're probably still a few stages from that, but not too many.
Yeah. No, that's a great point. By the way, for anyone who's thinking about, so as always, we always try to put time horizons. So I think it's really important what Tony just said. Longer term, this is really interesting. If you are a long-term investor, then this is something that you want to dig in and learn more about. If you're short term, just be careful because there are going to be people playing this like they play other sort of momentum trades. And so you have to be careful.
Yeah,
You have to
it's
pay
a
really close attention.
it's a many year storyline, and the price trades like ether, so you have to be really careful.
Yeah, that's right. And that's why that was the, I think, catalyst for Jared's original exchange when he was just commenting on it being a really crowded trade. So
Yeah, I think we already did the too many assholes in the trade in back earlier this year in
yeah,
March when it went bid, and he made that very call at around the highs, and the thing collapsed from there. And I think we're kind of just digging ourselves out of
right.
the first too many assholes trade.
Right. Lessons are hard to learn though. So if they start piling back in again, you just want to be aware of some of those things, right? Because we've seen this movie before.
Oh,
I speaking of sort of people looking, clearly people are looking for opportunity too, right? So that's some of what you're seeing when you get a sector that's doing better. We had Mark Ritchie on yesterday saying he's going to be watching biotechs too, right? They had a bit and performed pretty well even when the market was encountering trouble. So he's sort of interested to see what happens if there's continued leadership there. One of the other sectors that came up, Tony, for people who were sort of trying to find opportunity and put money to work in this sort of summer, volatility, was cannabis. Some people were looking at cannabis. Now, I know that's a sector you watch, really closely. I also know that it's been a source of pain for you and so many. Is that back on your radar again? Are you playing in that area or looking at any opportunities there?
I'm not allowing myself to trade cannabis, but I don't want to discuss it from a personal point of view for the Real Vision viewers. I mean, this is the kind of thing where, it may have just finally worn everyone out. When I look at the chart and I see cannabis breaking above major moving averages that I would normally be salivating over, but I look at my cannabis P&L, and it's big enough to crash a boat through this year, in the negative side. So that's why I'm speaking from a position of bankruptcy in the sector, and saying at this point, when bulls have to throw in the towel, that's usually when the thing goes up. So I'm trying not to say anything here where I can jinx it. I'm rooting for my friend Todd Harrison. I'm rooting for Jason Wild. I'm rooting for those stocks to come back to life. And that could be one of the opportunities that's presenting itself to dry powder right now.
Yeah.
Finally, the bell may have rung, and we may be close enough to, legalization, across the country and safe banking that, hedge funds are more than willing to front run the mutual funds that will eventually be in the space. So
Yeah.
if you can time that right, then you probably got a pretty monster trade on your hands. God knows how you time that right.
Yeah, that's right. Because remember, what Tony's talking about is federally, legalizing it federally, which opens up the ability for them to use the banking system, which has been the sort of holy grail and the thing that has just been disappointing time and time again and held back that sector. By the way, just want to loop back on something with uranium. If some of you don't know a lot about it but are interested, want to learn more about nuclear and all of the things that go into that market, and it's complicated. Go on the platform and check out an interview I did with Nick Lawson, Ocean Wall. It was a few months back. Fantastic, really, really in-depth conversation about everything you want to know about uranium. Highly, highly recommend it if you want to understand it. And if you're thinking about putting money into the sector, you need to understand it. So go check that out. Tony, we have a question from Bo that is interesting. A handful of the big tech names still have big valuations. Is it skewing the indexes? And if so, to what degree?
I mean, the indexes are priced where the indexes are priced. I don't know how to speak to a skew.
Yeah.
I can speak to the fact that their performance has been horrible since yields started rising, and that this is one of the major battles that's going on between portfolio managers this year, is that portfolio managers are still willing to put the deflation trade back on
Hmm.
where technology performs. And so they've bought the dip in technology and they've sold the rally in energy, and they're looking for, the recession deflation situation to start panning out again like it has for the last 15 years. And, we go back to the beginning of the sort of great rotation trade, Maggie, where I argue that it's different this time because there's never been an attack on commodity supply. So, there are different ways of looking at this trade. I certainly see both sides of them, and I'm more confident on the side that I'm on. But it does seem that tech is definitely going to struggle if we are in a rising rate regime, if that does turn out to be true, and the Fed can actually keep rising rates to fight inflation and finally get it back down.
Yeah. And we've been talking to some people who, would suggest when you still have those valuations sitting there, as you say, that are related to that deflationary Fed pivot or, friendlier Fed, then maybe you haven't seen the capitulation yet. I think that maybe what Bo might have been getting at too. And so until they roll over, you've got some risk to the downside. Mike has an interesting question. Could you recommend any ETFs which a retail investor could use to mimic your views? Do you have an ETF, Tony?
No, I don't. I would like to start one day. But broadly speaking, for what I see going on in the world and in the markets, I think that IGE, the Natural Resources ETF, really represents what I'm trying to portray in the markets as being a really, a still valuable trade going into the next several years, right? IGE is Natural Resources ETF. It's made up of a lot of energy stocks, metals and mining stocks, chemical companies, finished goods companies. And it seems like the things that would all take off in price if commodity inflation is persistent. So that's an angle that I like to play there. I'm bullish refiners at the moment, and they're a big part of IGE. The refiners are breaking out pretty seriously right now. The crack spread has remained elevated for a long period of time. They are starting to put up blockbuster earnings, and the stocks are taking off. So, if that's going to be leadership for the next several weeks, months, or quarters, or at least in the race for leadership, then the natural resources ETF is a good one to own, in my opinion. Knock on wood, because that is one of the positions that I've had on the view matrix for over a year now, I think.
Oliver is not Oliver, sorry, excuse me. William is asking, Tony, when will you go short energy? Is there a scenario where you see yourself going short energy?
I mean, yeah, I'm a trader, so it's one day there'll be a short side of the energy trade, but right now I feel like the risk is all to the upside, to be totally honest with you. That's just the way I'm reading it as a trader. When will I go short is like, probably when we have new leadership that writes 60 executive orders on his first day in office that erases everything that the Biden administration has done with the swoop of a pen. If that's possible, it's going to do a lot of lasting damage to our country. Living through this crisis, in terms of what it's going to do to the consumer, how it's going to change our energy consumption habits, what it's going to do to inflation, what it's going to do to the price of food, what it's going to do to food consumption and farming. So, this is a major, major issue to have on our hands, and I don't see it reversing until leadership changes course, and until something more conservative takes over both sides of Congress and starts threatening the White House. I can't imagine we're going to get near that.
Yeah. And we do have midterms coming up to add on to all the other volatility, but something
Yeah.
as drastic as that is probably not going to be a result of a midterm election. Ralph Humphrey is asking from the RV site, is Tony seeing anything interesting in metals other than precious metals?
Yeah, outside of precious metals, so in base metals, I think it's fair to watch that, the most important thing, big picture wise, is that sort of everything bottomed when 5-year break evens and market based inflation expectations bottomed, right? So a lot of the base metals had massive pullbacks from their highs. They bottomed when inflation expectations bottomed, and they are all really fundamentally set up for higher prices, right? Whether that happens or not, I don't really know. But there is still a tight situation in copper and aluminum. There are a number of canceled warrants on the exchanges, which means that people are holding on to their supply. There is consistent upward pressure and buying from all parts of the world. So I think that if anything, I'm still long industrial metals and mining based on a sort of technical level. But as long as metals keep bouncing and making higher lows from that recent low that we saw when sort of, recession fears got totally overblown, I'm okay with staying long them out of this hole. They've been on steep sale, and I think it's worth trading from the long side here because there's still upside risk in any kind of economic recovery, supply disruption, political stance changes. So I feel like the risk is still to the upside of metals and mining as well.
Mm. So Tony, we started the conversation asking if there's opportunity, and it sounds like you're still bullish. Your base case, which was that we are in a structurally inflationary environment, and that commodities are here to stay. You're bullish, still bullish oil, still bullish some of the metals, refiners. The basically the IGE ETF that you talked about. But I do hear some caution in your voice too.
Oh yeah,
And
well,
it
yeah.
sounds like you think we're going to be in for, you're going to keep things tight, that we're in for a pretty choppy period here.
Yeah, Maggie, I'm a technician at heart, and today is a really bad / alarming / do something close on, on the S&P. We've broken below, looks like we're going to close below 4K here. I don't have another support level till 3750. I was just long only stocks for the entire summer, and I put out my first short in home builders literally at the highs as it grazed its 200-day moving average just based on the chart. And then everything else fell apart. I'm adding some technology shorts to my pad. I think I want to be there. I think it's worth, I think sort of the next time down that the juice will be worth the squeeze. And that when we fall again this time, that there might be a significant slide towards the lows again. And that's kind of based on the fact that it seems to me that portfolio managers were happy to buy the tech dip the last time we saw it, looking for rates to turn back lower. Now that they didn't get it, tech is going to be cheap again. So that's still the trade that I'm putting on. I do expect a little more downside in the S&P. I would not be shocked of a test of the June low at all.
Yeah. And, in terms of, I'm assuming that you're really keeping an eye on risk and sizing risk. What about cash? I mean, does that look like the best opportunity right now just because it is going to be so tough?
Cash, did you say, Maggie?
Yeah.
We can't make money trading cash, Maggie. There's no profits in sitting in cash. No, I'm just kidding. Yeah, it's always an option, taking chips off the table is always a good feeling. Slowly buying gold and this seemingly endless dip on the way down doesn't even seem like a dumb decision to me if you want to just sort of sock chips away for 5 years out and 10 years out that you hope will be there. I think that those are good opportunities for the long term. So I'm looking at it right now more of that sort of the opportunities in the market right now lend themselves to the type of trading that we saw on that Chic meme that went around last week. Do you remember the guy that was using max leverage and max bidding? I mean, these are the opportunities that are alive and well right now in the US and the commodity markets. It's like playing blackjack against a dealer that breaks all the time. So I'm going to keep, sitting right at this table until the dealers finally go away.
Yeah. Well, I mean, we've been having this conversation, Tony. I can't remember how long. And you've been right. So, when it's been working.
It's been volatile, but so far so good, Maggie. We'll see. There'll be a day when I'm out of the trade and on to the next one. But right now, I'm still battling like a natural born energy bull that I am.
That's great. Tony, thank you so much. So great to catch up with you. If you can, enjoy the waning days of summer here before we
Oh,
all
I
have to
sure
really
will.
buckle back in.
I'm going right to the beach as soon as we hit the
I
off.
had a feeling beach and boat. I knew you would. Well, thank you so much. Enjoy, be safe. And for all of you, thanks for tuning in. If you have some time, stick around because in 1 hour, 5:30 Eastern, Real Vision co-founder Raul Powell is going to do an Ask Me Anything right here on the YouTube channel. So get your questions ready, whatever you were asking about, including the nuclear NFT. Oliver, I didn't get to your question. Bring it on. It's sure to be an amazing discussion. Ash is going to moderate. And Andreas Steno Larson will be back on the Daily Briefing tomorrow with Imran Locke. So take care and good luck out there, everyone.
Thanks, Maggie.